Good to see you, Todd. And let us begin with Boeing. Do you like the stock here?
Hey, Kelly. Happy New Year. I do, except we've moved into resistance here. It's had a great run from October, like 55%. We have a $180 price resistance, little trend line from March 19th. So we need to get through there. Like, plenty of good news, right? 787 order from UAL with an option to buy another 100. The problem is, though, also they've taken on a lot of long-term debt due to the MAX shutdown here. So I also fear with the big move, it's kind of a buy the rumor, sell the news with China reopening, right? They lifted travel restrictions, and you have carriers like UAL saying they're cautiously assessing the scene, where I think Emirates said earlier in the month they're, expect a full-on surge. So, on top of that, we're worried about a continued supply chain. Airbus announced that they were going to miss their year-end deliveries. So I really think it's all down to China. Further, we're waiting for China to approve that 737 MAX, and like 1/3 of the inventories that Boeing holds is headed to China. So I think it's all dependent on that. With that technical resistance, I'm going to say sell or don't touch right now.
Okay, let's move on, Todd. Stock number 2 is Nike. Real nice pop off some better than expected earnings, better than lowered expectations, we might add. What is the longer or medium-term trend like on Nike?
Yeah, hey, Sully. Big beat. EPS was like 33% above consensus, but margins are squished here. Inventories have been increasing, and I don't think Nike has as much pricing power as some of the other retailers as are, I would say, kind of high end. Technically speaking, the stock is below $118. That's resistance from August. If it can manage to get through that, they have another set of resistance, about 123 from June. Plus, the stock, I think, is expensive. They're expected to make about $3.11 in fiscal year 23, of which they're already in. That puts them at 37 times forward earnings, and I think analysts are expecting them to grow at about 6.6% revenue. So for me, it's a little expensive. My clients know I'm more of a Crocs kind of guy. That's a stock that I own in the growth portfolio. I like that one better.
Before dwelling on that, let's move along, Todd, to the utility. Southern Company.
Thank you. I appreciate you letting me.
Do you like this sector? Feel free to show us your footwear now, by the way.
Thanks for. And yeah, my trading Crocs under there. I like it. A good rotation into utilities with obviously this big move into value. Interestingly, as rates have moved up, long-term treasury yields have moved up. We haven't seen as much of a response from utilities as we'd expect. Southern Company, I don't own this one personally. I own Duke and Exelon in my dividend portfolio. They serve 3 states, about 9 million customers, electric utilities. They have natural gas. Sully, I'm sure, knows about it. They have 2 power plants, nuclear power plants, expected to come online in 23. The reports I read, probably not till 24. So maybe that gets pushed out a little bit. And also, this one's not cheap. 20 times next year's earnings. So a little expensive for a utility. So again, I prefer to err on Duke and Exelon.